Now, we did tick up slightly last year, last month, and I did mention that in the video that we are trending up. It looks like we're going to have a busy spring, but in no way did I think that we were going to shoot up this high as a benchmark price. The issue here is that the sales have been steadily ticking upwards over the past 3 months, and the inventory levels have remained relatively flat. That's a pretty big problem if you're looking to buy in Calgary right now. In this video, I'm going to discuss the monthly stats for February 2024 in Calgary, including an overview of the total residential stats, including the benchmark, pricing in different districts, and a review of each property type. We'll take a look at the detached, semi-detached, row homes, and apartments as well. My name is Andrew Jones, and I'm a realtor here in Calgary. Hit the subscribe button if you want to see more content like this, and stick around until the end of the video where I'm going to talk about my own predictions and where I think the spring market is heading in Calgary. Hey there, Calgary. Let's talk real estate. Specifically, what happened in February, and spoiler alert, it was quite the whirlwind. First off, new listings have been on the rise, hitting a whopping 2,711 units. But here's the kicker. Instead of slowing things down, this surge actually fueled a massive 23% increase in sales compared to last year, totaling 2,135 units. Talk about a real estate boom. Now let's talk about inventory, or rather lack thereof. With sales soaring and new listings trickling in, the sales to new listing ratio hit 79%. Translation, demand is through the roof, keeping inventories near historic lows. And get this, the months of supply dropped to just over 1 month. If no new listings came to market, at the current sales rate, all of our inventory would be completely bought up in just over 1 month. But what about the prices? Hold on tight, because the unadjusted benchmark price hit a cool $585,000, a solid 2% gain from last month alone, and over 10% higher than this time last year. Now let's zoom into the districts and brace yourself. The East District, known for being the most affordable in Calgary, is seeing a 25% year-over-year price growth. Meanwhile, in the city center, with its better supply levels, is lagging a little bit behind at 5% growth. Go ahead and pause the video here if you want to take a look at the gains year over year in your district. So what's the bottom line? Calgary's real estate market is on fire. With continually low inventory and high demand, it's a wild ride out there. Who knows what the future holds? Until we see a considerable amount of inventory come to market, Calgary is going to be in a seller's market for a while. So I want to look at a chart here. This one tells just about everything that we need to know with what's been happening in Calgary. This is Calgary total inventory and sales. Now, we saw things just kind of remain flat towards the fall. We saw the inventory levels and the sales dip off into the fall. That's what we typically see of a healthy real estate cycle. And that benchmark price kind of remained flat. Now, we did tick up slightly last year, last month, and I did mention that in the video that we are trending up. It looks like we're going to have a busy spring, but in no way did I think that we were going to shoot up this high as a benchmark price. The issue here is that the sales have been steadily ticking upwards over the past 3 months, and the inventory levels have remained relatively flat. That's a pretty big problem if you're looking to buy in Calgary right now. I did not think that this was going to happen. I did think that it was going to jump, but I certainly did not see this happening. And I think this surpassed a lot of expectations as to where the market was going to go. I see moving forward, I see this trend continuing, certainly not this sort of jump up, but you know, we'll check it out next month to see what the stats tell us. Now, looking at the city of Calgary total sales, this year to date 2024, we're still not as high as 2022. 2022 was certainly an anomaly in a post-COVID world, but we're still well above that 10-year average, but not quite approaching those 22 levels for sales. But we'll see the way that this year is turning out to be. Maybe we do get there. And if we look over at the new listings graph, we only have marginally more new listings than we had this time in 2023, but our sales are much higher. So that, again, that's why we're seeing that benchmark price jump up so quickly, because again, we're seeing new listings come to market more than we had last year, but it's not enough to quench all of that buyer demand. Taking a look at the detached market, picture this: 1,195 new listings hit the market, but a whopping 75% of them were priced over 600 grand. While we did see an improvement in new listings compared to last month, they're still below our typical levels for February. Looking at the sales, they surged to 954 units, marking a hefty 20% year-over-year gain. But with a sales to new listing ratio of nearly 80%, our inventory levels are hitting record lows for February. It's like trying to find a needle in a haystack out there for most buyers right now. And brace yourself for the price update. The unadjusted benchmark price skyrocketed to $721,000. That's a solid 3% bump since last month and a 13% increase from last February. But here's where it gets really interesting. While prices rose across every district, the Northeast and East districts saw the most significant year-over-year gains. These districts are leading the charge for year-over-year gains in appreciation. So what's the takeaway? With a tight market driving prices to new heights and inventory levels plummeting, it's a seller's paradise out there. So this is a chart here. We're looking at the detached inventory and sales. This is going to very closely mirror the overall inventory and sales chart that we looked at earlier. We saw that in August, September, October, prices stayed relatively flat, kind of around that $700,000 price point. We saw inventory levels start to drop. We saw sales start to drop. That happens. But right away, after December lows, we saw a January increase and another big February increase for sales. But what we have not seen is an inventory increase. And because of that, because that inventory level has remained flat, that's why we've seen the benchmark price for detached jump up to that's about $720,000. This is higher than I thought it was going to go. I'll be honest, I was right on my predictions, but I knew we were going up, but maybe not this far up. I think that this trend is going to continue until we see enough listings come to market. And the problem is right now, every time we have someone list their property, they're usually looking to buy as well. So it's sort of a one-to-one swap. So we're just not seeing enough new product come to market to deal with all of this buyer demand, certainly in the detached market. This is proven here as we look at the chart for the detached sales and for detached new listings. Yes, our sales are up this year from 2023, but we're above that 10-year average. But if we look at the new listings, just like last year, we're still well below the 10-year average. This is why we're seeing the benchmark price rise so sharply in the detached market. All right, let's take a look at the semi-detached markets. Last month, we saw a surge in listings compared to sales, but hold on because that was short-lived. This month, 223 new listings were met with 191 sales, driving the sales to new listing ratio to 86%. Talk about demand outpacing supply. And guess what? This prevented any significant change to the low inventory situation, causing the months of supply to hit just over 1 month. Now let me tell you about the semi-detached prices. The unadjusted benchmark price hit a solid $639,000, marking a monthly gain of over 2% and a whopping 13% increase over last year. While prices soared across the board, year-over-year gains ranged from a low of 10% in the city center to 26% in the East District. So what does this mean? With sales surging, inventory dwindling, and prices reaching new heights, if you're looking to own a semi-detached property, it's a really competitive market out there. Taking a look at our semi-detached market here, we were actually tapering off for our inventory and sales. If you look at the red line, our benchmark price, pretty much from October of 2023, we were starting to see a decline in the benchmark price. This was the only segment that was actually seeing a declining benchmark price. I was not very optimistic that that was going to continue. I did think that it was going to bump up. I called it. I told you last month in my video that it was going to jump up, albeit I didn't think it was going to jump up this high. As we look at the inventory levels, our inventory levels have hardly improved over last month, but our sales have gone up considerably. And so that's why we're going to see the rise in the benchmark price. As we look at the sales here, we're above the 10-year average. We're doing more sales for semi-detached than we were last year. Certainly not at 22 levels, but we are seeing, as we look at the new listings here, below the 10-year average, and we are seeing more new listings than we saw in 2023. So that is positive. But if just quickly going back to the inventory and sales chart, it's not enough inventory to take care of the demand that we have. or that we did have in February of 2024. Okay, let's talk about row townhouses. First off, new listings climbed to 457 units, contributing to a huge 22% year-to-date increase. But this new rise in listings was supported by the sales growth, keeping the low inventory situation pretty much unchanged. For the second month in a row, the months of supply were below 1 month for row homes. Getting into prices, the unadjusted row home price spiked to $436,000, marking an over 2% increase from last month and a staggering 19% surge from last February. Prices are rising, and they're rising fast. And get this, prices rose across all districts, with the most significant growth happening in the more affordable districts of East Calgary. Just like every other category, new listings are on the rise, and the sales are outpacing them, making for increased prices and quick sales. Let's take a look at the row inventory and sales. We have seen this benchmark price steadily tick up all through 2023. Although it did dip a little bit in November, I wasn't very optimistic that that was going to stick around for too long, and sure enough, we did sort of decline in November, and then December, January, we've seen it move up from there. So more than the benchmark price, we kind of see that scoop pattern. More importantly than that, as we look at the sales levels for the last 2 months for row townhouses have been higher than our months of inventory. And that is a real problem for this more affordable price point for people. As we look at the row sales, we are well above the 10-year average, still not at 22 levels, but we could maybe see ourselves get there by the end of the year if this market continues, but we're well above where we were last year in 2023. And the new listings were right on par with the 10-year average. Again, considerable more listings than we saw last year, but certainly not enough to quench all of that demand for buyers. The townhouses are a really good option for first-time home buyers, people that are maybe selling a condo, looking to move to a detached property, but that benchmark detached price is just a little bit too high. It's a little bit too unattainable. And so the townhouses become the more affordable option. And we're seeing a lot of people rush to those townhouses. And what was at one point the more affordable option, we're really seeing those prices go up to a point where if you add on $400, $500, $600 a month in condo fees, sometimes these townhouses aren't even making sense to purchase. And it's actually better to find yourself a detached home or a semi-detached home at a lower price point, because this row home benchmark price is getting so high. Let's talk about apartments really quick here. Let me break it down for you. The sales in February, a whopping 638 units. That's part of a year-to-date sales increase of 39%. I mean, talk about demand for a category that has seen a very slow recovery over the past few years. Now, what's driving this surge? Well, it's about relative affordability, especially when it comes to those sleek apartment-style condos. A lot of the lower-priced units are selling like hotcakes right now. And guess what? New listings are keeping pace with demand, which is awesome. Inventory levels have ticked up a bit over last month, but compared to last year, they're down a solid 12%. Translation, it's a seller's market. But here's where it gets tough for buyers. Prices are on the rise, and they have been since January of last year for apartments. They've been climbing steadily. As of February, we're looking at a median price jump to $329,000. That's up 17% from last February. Prices are soaring across every district in the city. We're talking year-over-year gains of over 19% in every district except for the city center, which still clocked in at an impressive 13% increase. Okay, taking a look at the Calgary apartment inventory and sales, we've been seeing steady increases in the benchmark price for at least a year now. As we saw all through last year, all through the fall, a really good steady increase of the benchmark price. I'm happy for all my condo owners that have maybe been upside down for a long time. I know if you're trying to get into the condo market, you're not so happy about all these price increases, but there's a lot of people that purchased in sort of the teens, and that they're finally starting to see some of the gains take them to a place where they're ready to sell. So I am happy to see that. We saw, again, this is really healthy. We see inventory and sales dip into the fall around Christmas and December. That's when our market is the slowest. But looking at February, we see that the inventory levels, they've started to jump up, but of course so have the sales. So we're not seeing quite as drastic of a price increase as we're seeing in the detached and overall benchmark price for the city, but condos are doing really well, prices are jumping up, and again, it stems back to an issue of inventory. Looking at Calgary apartment sales, we are higher than those levels in 2022, as you can see by this graph right here, and our new listings as well. Healthy to see, new listings were well above the 10-year average, and we're doing better than we were last year for new listings. So prices are still rising with apartments, but we at least have a little bit more inventory out there. The issue is that because this is a more affordable price point, there is a lot of demand, whether it's investors or first-time property owners. There's a lot of people looking to get into Calgary and into the lower price points, and that's going to put you into an apartment. So if you skip to the end of the video to see what I have to say about the market, here we go. This is what I think is going to happen. I do not see enough inventory coming to market to quench the demand that we have. I think we're going to see similar price jumps that we saw from January to February in February to March. We are fully into our spring market here. I know we just got like a foot of snow, but February has now become, over the last 3 years, Calgary's spring market. This is where we see the most buyers in the market. This is where we see the multiple offers and properties selling very, very quickly and usually over ask. Until we see more listings come to market, this is going to be the status quo for the next few months. And if interest rates start to drop, this will only be magnified. I wouldn't be the least bit surprised if we see another 2% increase in the overall benchmark price in Calgary for April 2024. Let me know what you think of this video. Let me know if you agree with what I have to say with the market, if you think that maybe we're heading in a different direction, or you've got something that you'd like me to cover that I haven't quite touched on in this video. I'd love to hear about it down in the comments. Thanks for watching this video. My name's Andrew Jones, and we'll see you on the next one.